Hello everyone and welcome to my 5 to 10 minute brief update on different stocks in the news. This is about Twitter. Musk backs out of the Twitter deal. What does that mean for Twitter's stock? Before I go over the chart, please like my video, please subscribe, and please turn on the alert button so next time I post something, you'll be the first to know. Visit my website, intelligentinvesting.market, where you can sign up for my alert services and trading services and anything you want to learn about the stock market. And please follow me on Twitter at intel_invest. So let's have a look at the Twitter chart and see what we can find. Please remember that for my work, I mostly use the Elliott wave principle. If you go to my website, intelligentinvesting.market, please click on menu, then education and Elliott wave principle, and it will tell you exactly what I am tracking. Very short, the market moves up, or any stock moves up in 5 waves, and it moves lower in 3 waves, and those 3 waves patterns can be quite complicated. In the case of Twitter, I am looking at what we call a flat correction. What is a flat correction? A flat correction is where the market kind of moves sideways in a harmonic type of pattern. We have a leg lower, a leg higher, and another leg lower before the bull market resumes. Some people call this sideways congestion or a bull flag. It's all good. In Elliott wave, we call this a flat. There are 4 different types of flats. Regular flat, irregular flat, running flat, expanded flat. If we look at the chart of Twitter, it looks like Twitter is going through a irregular running flat. Namely, Twitter IPO'd here in 2013. It rallied and has since been moving pretty much sideways. Today it is down 10% on the news that Elon Musk is backing out of the Twitter deal. So go back in time and we see here 3 waves lower from the all-time high here made in 2013 to the all-time low, I would say here in 2016. An A, a B, and then a C wave lower with the C wave subdividing once again. That is the nature of Elliott wave. We have fractals. So we have black A, black B, which is a wave degree, red A, red B, which is another wave degree lower, and then the red wave C subdivides into 1, 2, 3, 4, 5. From that low, Twitter then made clearly 3 waves higher here in black, A, B, and C, to complete this blue wave B, right? We completed blue wave A, we completed blue wave B, and since we're in a flat correction, we now need to have blue wave C. I know the example here is in red and yellow, but that is fine. It is the same pattern, ABCs. It's all ABCs. So the C wave is then going to be 5 waves because a flat is a 3, 3, and 5. Now look at the price action, 1, 2, 3, 4, and 5. Now you may say wave 4 overlaps with wave 1. That is fine. That is allowed in a ending diagonal. In diagonals, wave 4 and wave 1 can overlap. On April 25th, Musk agrees to buy Twitter for $44 billion, and 2 months later, the deal is off. Where can we then expect wave 5 of wave C of cycle 2, potentially cycle 4 to complete? Remember, when cycle 2 or 4 completes, Twitter will take off for either cycle 3 or cycle 5 to new all-time highs. But we're not there yet. First, let's have a look on what Twitter is doing right now and where we can expect it to bottom. So we have the length here of wave A, and I'm going to make that length here in a Fibonacci pattern. And we're going to add that to the top of wave 2, and then we know that wave 3 should bottom in this 123.6 to 138.2% extension of wave 1 measured from wave 2. And so far it did it exactly. And then wave 4 in the ending diagonal should reach the 61.8% extension. It did it exactly. And then wave 5 has 3 paths to go. The first one is where it is equal to the length of wave 1, which targets around $22, $23. The second one is where it is equal to the length of 0.618 times that of the length of wave 1 plus wave 3. So this entire decline. So we start here, all the way on the top. We measure it all the way down, and you can see here 0.618. So we drop that to the start of wave 2. And where does that get us? Okay, right here also at $23. Picture perfect. Okay, this is absolutely picture perfect. I like it. There you see $23 right there, which is right here where 5 equals 1. The last test to see how low we can expect things to go is that the fifth wave tends to reach about 161.8% extension in a ending diagonal, which gets us to $22. It's a little hard to see here, but you can see. So we now have the target zone here in black for 3 different ways. 5 is 1, 5 is 0.618 times the length of 1 plus 3, measured from wave 2, and 5 is 1.618 times 1, also from 2. So anywhere between $23 and $22 is where I expect Twitter to bottom, from where we should see at least a big rally, preferably to new all-time highs for either cycle 5 or cycle 3. Okay, so far nothing out of the ordinary. Remember, the Elliott wave tracks sentiment, and sentiment is still negative on Twitter. Also look at where Twitter is in relationship to the moving averages. The technical indicators are all pointing down. The Bollinger Bands are expanding to the downside. So price is weak. Price wants to go lower. I'm looking for Twitter to bottom, ideally at around $22 to $23. I will monitor it. If I change or see a change in price action, I will adjust accordingly, because all we do is anticipate, monitor, adjust. But I have 3 different levels all pointing to about, or 3 different methods all pointing to the same level, $22 to $23. Let's see if we can get there. Thank you so much for listening. Thank you so much for tuning in. Take care, trade safe, and I'll see you all next week. Bye.